Hi everyone, welcome to Vantage Educational Series for today. Right, so good morning, good afternoon to you as well, Jamilu. Currently it's 4 p.m. Singapore time. Right, so good afternoon to you. Right, thanks for being here with us. So I'll give it about 1 to 2 more minutes before we kickstart the session. Right, at the same time, right, for those of you guys who have any questions, right, along the way, just feel free to stream them or put the questions via the app. Okay, so we'll just give it about 1 to 2 more minutes before we kickstart the session. I'm seeing quite a few of you guys here via Zoom as well. So if you have any questions, right, just feel free to type them under the Q&A chat. Okay, so I have the chat box open. So we'll just give it about 1 more minute before we kickstart the session. Okay, so for those of you guys who just joined us via the stream, right, if you have any questions along the way, just feel free to type them under the chat box or Q&A box. Okay, so with that, let's kickstart our session. So today's focus will be mainly on looking at supply and demand areas, how we can combine them across multiple timeframes. And I'll be taking a look at a few chart examples as well, just to explain general market structure and also how we can use these zones for our shorter term setups. So just a quick introduction of myself. I'm Lee Sing. Right, so throughout the session, if you're watching a recording of this, if you have any questions, right, please feel free to reach out to me on LinkedIn. If you're with us live, right, if you're watching it via the stream, via the app, please feel free to put your questions there, right? I have this chat box open. If you're with us on Zoom, right, please feel free to type your questions there as well. So along the way, if there's anything that you don't understand, right, I'm happy to clarify them. So just a quick disclaimer, right? The information presented here, it's not to be treated as investment advice. It's for educational purposes only. So the first part of the session, I'm just going through the basics in terms of market structure, following which we'll be taking a look at the chart examples, right? So this is more for the benefit of those who are new to market structure. The concept is very simple, but at the same time, it can be very useful when you put it across different time frames. So let's first take a look at market structure, right? So we'll be understanding a bit more on market structure and how we can combine them with price action. Following which, I'll be hopping on to the charts to take a look at supply and demand zones. So throughout the session, right, we'll be taking a look at a few examples. One of it would be on dollar yen. Just look at how prices are reacting off a specific area and the reason for that, right? And how these zones, right, if they serve as supply and demand, how we can actually look for lower time frame entries. So that's a big part of what we will be covering for today. Right. So first, on the basics, right? So there are three types of market structures, right? So, or rather market phases. So the first one that we have, it's basically an uptrend. So in an uptrend, we can see price forming higher lows and higher highs. So if you take a look at what we have to the left, right, this is essentially market in an uptrend, right? If you load a chart on TradingView, put these prices in close, in an uptrend, you can see consecutive or successive higher lows and higher highs being formed. So let me just bring out the marker, right? So you can see successive higher lows and higher highs being formed. So in this case, right, there are two takeaways from this. The first one is that you can see in an uptrend, when price does a pullback, we are looking for potential demand areas that price could pull back into before taking or trading in the direction of the trend. Now, this is important, right? Of course, whether we will identify which is a demand or supply zones, right? We will be taking a look at it in the examples. But the idea is that when prices are in an uptrend, we can see that these highs can serve as profit targets. So if you take a look at any chart, right, when prices are trending strongly to the upside, what we have here is that the highs themselves are constantly broken, whereas the lows that are formed, right, following the break in structure, these lows are not violated. So one good example of this, right, would be this area here. So notice this region where we see price consolidate. And so when you see prices consolidating at this point, you can see what happened, right? So price starts forming higher lows, higher highs. We see a break and more importantly, a close to the upside. So when price broke and closed to the upside, it validates this low as a support. So this region here, right? So which means that price, as long as it holds above this, you can see that price in an uptrend, right, it should not be breaking and closing below this low. So you can see in this example, right, when price came in over here, it swept the low slightly. So this is what we can term a liquidity sweep. And basically a point where if we have prices trading or a key support level that price is coming into, right, we could see that at some point, right, price could just dip slightly lower, essentially to hit the stop losses that are lying slightly below, right, before continuing to the upside. So in this example, you can see here, right, so one thing I want to highlight is that in a clear uptrend, we can see we can use these highs as take profit targets. So this is important, right, because when price starts pushing or reaching this profit target at certain points, right, we'll be seeing reversal. That's one. Of course, right, there are also cases where in a clear, strong uptrend, prices break and went beyond that. But the reason why this is important is because once we have highlighted this as the profit target, when price starts coming into this zone, we want to start trailing or protecting the positions more aggressively just in case we see a strong pullback. Okay, so that's in an uptrend, right? So you can see here, right? So first takeaway, we talk about using the profit target, using these highs as profit targets, which also means that when price starts reaching these zones, right, in strong uptrends, we could see a clear break to the upside, but there are also cases where we see a pushback into the zone before we see that retreat and price coming back to sweep the low or even into a potential demand zone. Now, with this in mind, once we have covered that, right, the second thing to note with this uptrend is that if the low is not violated, what also means is that a reversal of this uptrend, right, indication of this reversal, which means that prices are ending potentially, right, this uptrend, it's when price starts breaking and closing to the downside. So again, right, if we're in an uptrend, right, the lows themselves, you can see that they would hold. So price might come in, sweep slightly below this, but it does not close below this region. So when there's an indication of an end to an uptrend, right, this is when we see prices starting to close below this zone. Okay. Okay, so we have a request via the stream for gold. So yes, I'll be taking a look at gold shortly, right? So we'll be taking a look at that later on. Right, so let's take a look at our downtrend, right? So the similar concept would apply in a downtrend. So in a downtrend, you can see successive lower lows and lower highs, right? Again, this concept is very simple, but at the same time, right, this is key into how we can actually combine them across the time frames. Okay, so in a downtrend, we can see that the highs are not violated, which means highs are not broken. Lows are constantly broken in a downtrend. So when prices are trending strongly to the downside, right, we try not to buy at support levels, given that these lows themselves are targets. So you can see this zone, right? So two things again to note. One is that we can use the lows as profit targets. When price starts reaching this area, right, we could see a pullback, which is why we want to start trailing this stop losses more aggressively. That's one, right? And the other thing is that once we do see a change in market structure or an end to the downtrend, right, this is really, it happens when price starts breaking and closing above the high. Now, how does this apply in terms of our trading or on a higher time frame context, right? So take a look at this, right? So for example, when we see price trading strongly to the downside over here, right, if it's coming into a demand area on the higher time frame, right? So if we take a look at support resistance level, right, if it's coming into a demand area on the higher time frame, you can see that as long as price holds in a bearish move, right, price could just continue much lower to the downside. But again, right, as to whether it will respect this zone depends on your lower time frame. If price starts changing structure, so you can see here, right, it starts forming lower lows and lower highs, and following which it starts breaking and closing to the upside, this is an indication that we could be seeing signs of reversal. Okay, so with that, right, let's hop on to our charts. Right, I'm seeing via the stream, right, some of the comments to say that you can't see my screen. So are there any technical issues there, right? So for those of you guys that are streaming via the app, can you see my screen? If you can you please just put yes or no, right? If you're experiencing any technical issues, right, please just comment in the chat. Well said, but difficult to execute, right? Yes, it's true, right? So we will be hopping onto the charts. I will show a few examples of how we can do that, right? And part of it, I would have to say, right, it is also guesswork. So we're trying to look for lower time frames regions, right? Trying to identify the general structure and also lower time frame regions. Okay, seems that you guys are not seeing my screen. Let's just see, right? If no issues on Zoom, right? Awesome. Okay, so I'm not having any technical issues via Zoom, but it seems the case, right, on the app. So I'm getting a mix of reply, right? Some of you guys can see my screen, but some of you guys cannot see my screen, right? So for those of you guys who can't see my screen, right, could you just exit the app and just enter again, just to see if this works for you? Because I'm getting some people who are able to see the screen, right? So just try that and see if that works, right? So no issues via Zoom, right? Thank you so much, Kathy. Okay, so on the downtrend slide, lower low, it's higher than the previous. Which low do we count as a variable to count it as a change of trend? So in this example, right, change of trend comes in over here, right? You can see price breaking above the high, this region, right? So in response to your question, Chris, right, when price starts breaking above this, right, this is the first indication of a change in trend. But one thing I do have to highlight is that this region, right, so when price starts coming into this zone, it has to come from a higher time frames demand. So we're not just going onto the chart and identifying this change in structure here, right? It has to come from a higher time frame demand region, right? So this is very important. If it doesn't, right, you can see that price will just continue much lower to the downside. So the whole change in trend comes in when there's a catalyst for it, right? So if we have price coming into higher time frame demand, and it's starting to show signs of reversal, right, then this is an indication. So I'll show this example, right, on dollar yen, right? Maybe we would be able to see that. Okay, and I've a few other questions, right? Thanks for that. Okay, so on Zoom, it seems that I'm getting quite a few comments with us seeing the screen, so that's great, right? Hi, Natasha, right? So new to trading, can you explain how we protect the take profit like you mentioned? I've been following signals for gold, but always lose. I don't know what I'm doing wrong, right? Okay, so one thing to note with this, right? I'll explain in the dollar yen chart so that hopefully, right, it's clearer for you. And yeah, so one other thing to note with this is that, so this take profit targets, right? So if we're in a downtrend, you can see that these lows themselves are used as a take profit target. So once price starts reaching this area, right? So there are two things when price starts coming into this zone. So when price starts reversing and hitting this region, we could see a pullback into this area, which is also the reason why when the first initial profit target is reached, we want to protect the setups more or protect the trade more aggressively. That's one, right? Of course, if you're in a higher time frame downtrend, we could see a pullback before price continues much lower. Okay, so one thing to note is that, of course, right, when price starts reaching into this take profit targets, you can trail it based on multiple ways, right? For me, I trail it based on support resistance levels or supply demand areas, right? So essentially, if price comes into this zone, it starts forming lower lows and lower highs, right? This is an indication the trend is likely to continue. But if we're seeing a tap of this region before price starts reversing, right, then this is where we want to start putting our stop losses. So essentially trail your stop loss. So imagine if you're opening in a position, right, initially, we have, let's say, entry at this point, stop loss above the high, given that the highs are not violated, right, take profit over here. Let me just clear these drawings. So that's neater. Okay, so let's say here, right, if we have an entry in the supply region, after supply starts going through, stop loss above the high, given that the highs are not violated, right, in a downtrend, targeting this low here. When price starts reaching this region, you can see that on the most lower time frame price action, pushing into this zone, this whole move itself would be forming lower lows and lower highs. So as long as that holds, right, this would still be bearish. So the indication or the reversal comes in when price starts breaking to the upside, right? So with that in mind, right, how you can actually trail this profit would be just to trail it according to the last high. So depending on how aggressive you want it to be, if you want it to be based on the 15 minutes, right, that will be much tighter stop loss that's being trailed. If you trail it according to the 1 hour, then of course your stop loss will be much further. Right. So personally, right, in terms of trailing it, I trail it according to the 15 minutes time frame. Okay. So that's for that, right? And also for personal personal time frame trading preference, right, it will be based on the 4 hours and 1 hour. So that's for me. But again, right, as with all analysis that you guys see in the live analysis session, right, I do it from the higher time frame. So the higher time frame would help us to determine the general direction of the market. Okay, so let me just hop onto the chart so that we can see that and see how that plays out. So before that, right, let me just cover the last market range, or the last market phase, right, which is really the ranging market. This market, or this phase itself, it's the trickiest, right? Given that you can see that when prices are in a range, we have a support and resistance level that prices are trading within. So this region itself, you can see price respecting both a resistance and support region. And so we have, imagine the floor that prices are coming into, which serves as a support. And then when price reach this zone, right, we have a resistance area. So earlier I covered about liquidity sweeps, right? So the idea is that when price starts coming into this zone, right, for general, if you're new to trading, right, trading just based on support resistance levels, when price starts coming to this region, right, we enter buy orders over here, stop losses lying slightly below this area. That's one, right? So if you're trading within a range, the other would be breakout trades. So essentially waiting for price to push and break this zone. Right, so there are 2 ways to play breakout. One is to wait for a break and close to the downside before we take the pullback. Right, that is a more preferred way to do it. The other way would be to put a sell stop. So what I mean by sell stop is essentially when price, especially in news events, it starts pushing very strongly to the downside, we see a strong trigger, right? And with that, when you have a sell stop, it triggers your sell orders when price push strongly to the downside. So with that in mind, right, based on what was mentioned just now, you can see that you have stop losses for your buy orders. And if you're buying, right, your stop losses are basically sell orders. And the other one would be if you're waiting for breakout trades and you're selling once price breaks below, right? These are also sell orders. So notice what we have here, right? So when prices are in a range, you have sell orders that are lying slightly below. So these are what can be termed as sell side liquidity. So essentially lying slightly below your support, you have sell side liquidity, right? That means essentially an area where there are tons of orders lying around waiting to sell. And likewise can be said, right, for the resistance level here. When price breaks above, right, you have buy orders waiting to be triggered, or if people are entering shorts from here, they have their stop losses, which are also buy orders lying slightly above. So above and below the zones, right, you can see that when prices are trading in a very tight range, these are also areas where we could see wicks or stop hunts, right, essentially tapping into this zone before price goes into the reverse direction. Okay, so with that in mind, right, one thing you can also note with this, it's that when prices are in a range, as much as possible, we try to wait for a break above or below the range. So this is an example of a stop hunt, you can see, right? So we have a resistance area which price reversed strongly below. And then when price revisited the zone, we see a strong wick to the upside, taking some of the buy side orders before it reverses in the opposite direction. And so essentially, this can be seen also as a stop hunt, essentially taking out some of the stop losses before price continues to the downside. So with this, right, one question you might want to ask is that how we can identify these regions, right? So if you take a look at it, a range that we have on the lower time frame, essentially these areas can be identified on the higher time frame as dojis, which I've covered in previous sessions as well. So dojis on your monthly time frame, dojis on your weekly time frame, right? Essentially, what are dojis? Dojis are candlesticks with long wicks and a very small body. Now, what does this mean? Given that the body itself represents the open and close price, it means that price was struggling for direction, right? So prices were struggling for direction for a period of time. If you're on the weekly, then it means that you have a support and resistance level that price traded within, and the high, it's essentially the resistance, and the low of the candle is the support. So there is a support resistance level price traded within for that period of time before it actually break to the upside or to the downside, right? So this doji, following the breakout, this doji can serve as demand or supply region. Okay, so with that in mind, right, let's hop onto our charts. Let me just bring that out, right? We can see a few examples on it. I'll also explain a bit more on market structure and how we can combine them. So let's take a look at it. So the one that I want to cover today, it's really on dollar yen, right? So let's take a look at this area on dollar yen. So I hope you can see my screen. Let me just clear the drawings. Okay, so I hope you can see my screen in terms of how we can identify the general direction. Let me just remove all this. Okay, now let's take a look at where we are on dollar yen. So you can see that this is the monthly time frame on dollar yen. We are seeing this whole move to the upside, prices forming higher lows and higher highs. If you take a look at it on the monthly, right, I'm just looking at the most recent price movement. So anywhere from here onwards for the past almost 1 year, you can see that prices have been trending in an uptrend. And if you take a look at just the candles alone, you can see very clear higher lows and higher highs to the upside. And this whole move, right, if you have to move to the lower time frame, you can see on the weekly, right, it's represented by the same thing. So clear higher lows and higher highs, which means that if we do see any pullback on the lower time frame itself, right, we can use the high as a potential target. So I hope that that's clear so far. Right, so on the monthly, on the weekly, you can see this zone. We can also see price ranging here. Right, so it's trading within an ascending channel. Right, and of course, for channel to be valid, right, we need price to tap the resistance area, to test it twice, to validate that resistance, and then again as a support twice here, which we're seeing with this case. So that's currently what we have on dollar yen on the weekly time frame. Now let's move down, right? So given that the monthly and weekly it's bullish, right? Let's move to the lower time frames. So on the lower time frames, you can see this zone, right? So just with the most recent price movement, you can see what happened here, right? So price broke to the upside. We have this area that serves as a resistance that failed here. So if I put this level in close, you can see a strong reversal over here. And following that, price broke to the upside and it tested this region again as a support. Right, so if I put this levels in close, you can see this area as well. Price testing this zone, following a break to the upside, right? It's more of this zone really. Right, so the high to the low, this region. So you can see this area, right? When price starts coming into this zone, it broke and retested, and it just continued to the upside. So that's on the weekly time frame. Now, if I take a look at it on the daily, right? So daily is where things get interesting, right? So notice this whole move that we have here, this whole region that we're seeing that consolidation. So recall when we talk about prices in an uptrend, we talk about price forming higher lows and higher highs, right? So this is what we have. If I were to trace out the move, you can see clear higher lows and higher highs being formed. And then subsequently what we have over here, right? The last move, right? Notice this area, price starts coming into the support region. Right, and this support region was from the higher time frame, the weekly. It was the previous resistance that failed. Now, at this point in time, right, we have this high over here as a target. Right, so if I were to replay this slightly, you can see this area, this whole move to the upside. When price is in an uptrend, right? So when prices are in an uptrend, you can see that when price starts forming clear higher lows and higher highs, it creates this region as our target. Right, so this high itself is a target over here. So which means that at any point in time when price starts pulling back into this zone as a support over here, this region, right? We know that we have an open target, which is this high, which caused the pullback. So you can see that price broke to the upside, did a pullback, right? And we're in an uptrend. So the general or the primary trend itself is still to the upside, and it creates this high as an open target. Okay, so with that in mind, right, we can go to the lower time frame. So as long as prices are within this region itself, this low, right, we're waiting for price to push much higher into this zone. So with that in mind, right, you can see that this whole move to the upside on the lower time frame, it'll be much clearer, right? So if I move down to, let's say, the 15 minutes time frame, you can see this whole zone to the upside. You can see very clear structure. This move here, right, not much here. I think this is driven by news events, right? This whole strong move to the upside, but following which you can see what happens. Then, right, price starts forming clear higher lows, higher highs, higher lows, and higher highs. We're seeing some kind of consolidation, hesitation before reaching this high here. So you notice this region, this area here, right? So this is one way we can actually combine, right, the different time frames. So based on the higher time frames direction, use it to determine the lower time frames entry. So with that in mind, right now, when we are here in time, so let's say if you're on the 1 hour time frame, this region, right, when price starts coming into this zone, on the 1 hour time frame, you can see this whole move to the upside. What happens? We have clear higher lows and higher highs being formed, right? So again, I can trace out this move, clear higher lows, price broke to the upside, higher highs, and then price broke to the upside again, and we are seeing that pullback. Right, so recall what we covered in an uptrend. When price starts forming clear higher lows and higher highs, the last low itself in an uptrend is not violated. Now, use this theory, right, and look at what we are seeing here, right? So if price starts forming clear higher lows and higher highs, you can see that this is the last candle that we have over here, right, which held as a support. Following that, price broke and closed to the upside. So, which means that we should not be seeing a violation of the low if the uptrend is still present, right? So in this example, you can see that when price starts forming higher lows and higher highs, right, we can have an entry over here. Given that price, this candle itself closed and break to the upside. So this retest, right, essentially this whole move to the downside, it's price breaking the previous structure, right? So if I were to paint it out, it's something like that, right? Higher lows, higher highs, price pulling back to form the structure. And we have a target, which is this high that was based on the higher time frame, right? This high was based on the daily, I believe, or the weekly. So we covered that this high that we drew just now. This high, right, based on the weekly and the daily, right? So this high, which essentially caused the pullback. So as long as prices are still pulling back into this zone, this target has not been reached, right? This high itself, it's present. So if you look at it again, back down to the 1 hour time frame, you can see that this serves as a potential entry here. And where would you put the your stop loss, right? So if the lows are not violated in a downtrend, right, the stop loss can be slightly below this previous low. And then price just continue much higher to the upside. And so you can see the same thing would apply here. So now where we are right now, you can see this whole zone that we have on the 4 hours, right? So you can see the general direction, it's still more bullish. We have this whole area, right, using the same concept, again, clear higher lows and higher highs. Over here, right, if you take a look at the most recent price movement, this whole move to the upside, we can see that price was forming higher lows, higher highs, higher lows, higher highs, and then it broke to the downside, created this zone over here, this low that we have, and then price pushed back again to the high, right? So now currently we are in a range. So within this range that we have over here, again, we can use the same concept, right? So if prices are in a range, this zone, right, we have the high that has been targeted, price wick slightly above, but did not close above this high. And this low itself then becomes the target, right? So if price did not close above the high and your lower time frame starts showing that you're in a bearish market structure, we can target this low, this region over here, right, as a potential take profit target. Okay, so if I were to move just 2-3 candles back slightly, you can see what happened here, right? So price came in, it broke and closed above the previous candle, created this area as a demand, and then price tested, right? So at this point in time, if I were to replay this chart somewhere here, you can see that this is still in a bullish market structure. Price came in, right? You see a break to the upside. It created this level as a demand over here. This area as the demand, right? And we have a target, which is this high. So as long as price is in an uptrend, which it is, right, at this point, you can see again higher lows, higher highs. It creates this as an open target. So as long as price did not reach this level, we're still bullish. But what happens subsequently, you can see that following this, right, if I go down to the lower time frame, you can see again demand starts gaining control. We have this whole move to the downside, right? Price came in, and then what happened after it came in and it tapped into this region. So the target has been reached. Once the target has been reached, right, let me just fast forward slightly. So you can see that the target has been reached over here. And once the target has been reached, right, it creates this value as the region. And the reason why this is so, it's because price did not close to the upside. So if it broke and closed to the upside, then creates a new demand level. But at this point, right, it did not. So this whole region, right, you can see that if we create this as a target, if this it's a potential target, right, for price to reach this level, it has to be in a bearish market structure. Again, lower lows and lower highs, right? So with that in mind, if we are seeing lower lows and lower highs over here, which means that we can take short positions, right? You can base your entry based on resistance levels, for example, as long as this target has not been reached. Okay, so in this example, right, on dollar yen, if you have to base it on the 1 hour, right, entries based on the 1 hour, essentially we're looking at resistance levels that fail, right? So in this example, you can see that this was a zone, right? Even pushing into this area, if you're basing it just based on market structure, pushing into this zone as a resistance, right, or pushing into this target, you can see the most recent price movement, clear higher lows, higher highs to the upside. And then what happens after, right? Price starts breaking to the downside, right? So recall I talk about bullish market structure and how as long as this bullish market structure is still intact, we should not be seeing a violation of the move to the downside, right? So price should not be breaking below the low, because in an uptrend, you can see the lows are not violated. And this is what we're seeing here, pushing into this resistance area. You're seeing clear low, higher lows and higher highs. But once this target has been reached, you can see once this target has been reached here, right, price starts reversing and there is this change in market structure. So even if you were to mark out just the most recent highs and lows, you can see this whole move to the upside, right, price starts breaking structure, right? So this is an indication that on the lower time frames, it has reversed. It's now in a bearish market structure. So we're waiting or taking, you can take any positions to the downside. Of course, you have to manage the risk and reward, right? So manage your risk to reward ratio properly. So at this point, you can see that this is a potential area of entry just based on support resistance level. This region here, which price tested as a support before it failed. And once it broke and closed to the downside, it created this as a valid supply. That's one, right? With this low in mind. And the other, right, would be to base it on. So if you were to go to the lower time frames, you can see that even on the 1 hour with this whole move itself, right, prices this whole move to the downside, this whole leg, right? So let's focus on this leg. Now, if we go to, let's say, the 15 minutes time frame, you can see the same thing, right? So price again forming lower lows and lower highs. And with this move, this whole region, you can see this area here. Again, we have a support level that was formed over here. So in a downtrend, you can see that all the support levels that were formed, they're violated, right? So you can see hold this all this move to the downside, right? Price just violates this support level. So one thing to note with this, right, on the 15 minutes, the most recent resistance area would be this zone over here. You can see this area, which price tested as a support, failed and broke to the downside, close below this, right? So if price does retest and pull back into this zone, right, this is a potential area for entry as well. If I were to stretch this all the way to the right, you can see that this whole region, right, was also the previous support level. But I'm really looking at just the most recent price movement, given that this whole leg is the one that was causing that pullback. So these are all potential areas of entry, right? If you're to highlight it just based on specific levels, so let's say if price comes into this zone, right, price could pull back much deeper before it continues, right? Or it could pull back into this area, right? Again, if price does pull back into this region, we can use a lower time frame, right? So when price push into this region, you can see that pushing into this zone, it doesn't show now, right? Because it's pulling back, but let's use another example. So let's look at this pullback here. You can see this pullback, right? This bullish candle, and even this most recent pullback, right? So if I were to go down to the 5 minutes time frame, you can see this pullback, right? It starts again pushing into this zone. You can see very clear higher lows, higher highs before price broke and closed to the downside. Just looking at this movement alone, you can see this is clear. Right? So this region, you can see this area that caused the pullback. Right? If I put these levels in close, you can see this pullback. Again, it's forming higher lows and higher highs. So higher lows, higher highs. And then what happens? The reversal comes in when price starts breaking and closing to the downside here. Oops. Hang on a moment. Can't seem to get right. So it starts breaking and closing to the downside, which is really this area. So if you're waiting for lower time frame, right, waiting for price to push into the 15-minute supply, you want to use the lower time frame as confirmation for the reversal. So if I have to move back slightly, you can see that this whole zone, this whole region, right? So let me just remove all of this, right? So given that prices are in a downtrend, right? So we're still bearish as long as this level has not been reached. But at this point in time, you can see that when price is in a downtrend, right? You can see when it pulls back into a resistance area, right? So price starts respecting this resistance area here. It pulls back into this zone, right? There are two questions, or rather two schools of thought, right? We don't know if price would just continue much deeper. It could pull back into this resistance or this resistance for that matter, right? But how do we know whether price would reverse from here? It's dependent on the lower time frame. So as long as the lower time frame starts showing signs of reversal, this whole pullback leg, you can see that if I were to just narrow down this move down to the 5 minutes time frame, right? So the one in red, right? So if I were to narrow it down on 5 minutes, you can see that this whole move, right? This whole pullback move on the 5 minutes, it's a clear bullish move, higher lows, higher highs. But what happens after? Price starts breaking to the downside and closing. So in an uptrend, right? The lows are not violated in an uptrend, right? So which means that as long as this continues, price could push back deeper into the zone. But this is not what we're seeing, right? Following that, we have a break and close to the downside. So break and close to the downside. And then this area, this region is confirmation for the bearish move on the 15 minutes resistance, which is really this area over here. So you can see that when price starts breaking and closing to the downside, right, it confirms the bearish move. And so this is currently where we are right now, or if you're looking at it, right, other stuff that you can look at, right, would be, for example, descending channel. So you can see price forming clear lower lows and lower highs over here, right? And this makes sense because if we do see the pullback on the 15 minutes, sorry, on the 4-hour, 1 hour, this open target that we talked about, this region. So this was the low that caused price to move much higher, right? But at the same time, you can see that this was also an area which price did not break and close above. So again, in a ranging market, or rather in an uptrend, when the low itself fails to break above the high, right, this low becomes a target. So this is what we're seeing right now here. Right? You can see that when price starts pushing to the upside, fail to close above, and on the lower time frame, it starts showing you signs of reversal in terms of lower lows and lower highs, right? Then this low itself becomes a target to look for. And you can use either based on support resistance level, if you're looking at that, right? Or based on supply demand areas to take potential entries. Now, one other thing I would like to highlight is, of course, the use of dojis, right? Dojis, I would say it's much more effective on the daily time frame or the much higher time frame. The reason for that is because if you take a look at dojis, right, on the, let's say this example here, let me use an example of a doji, right? So you can see this zone, this region over here, right? On the daily, you can see that we have this doji. So doji essentially is characterized by a candle with relatively small body, right, and long wicks. So this is what we're seeing here. You can see that the doji, right, following that doji, there's a strong break to the upside. Now let's zoom down to this doji on the 4 hours, right, even to the 1 hour time frame. You can see this doji on the lower time frame. Essentially, it's a range, right? We saw that range, that price traded within this area. So you have that range that price traded within for a period of time, right? And in this example, it would be for a day, right? Before price retested this zone. So if I were to go back to daily time frame, you can see this doji that we have over here. Right, so this doji itself, following the doji, we have a strong break to the upside. Strong breakout to the upside here. Right, you can see a strong break to the upside. And then again over here. And what happens after price broke and closed to the upside? This doji then serves as a demand. So you can see this area, right? So this doji that we have over here, right? Once price broke and closed to the upside, this doji serves as a demand zone on the higher time frame. It serves as a demand zone on the daily. And then again, right, over here when price pulled back. So again, right, when prices are in an uptrend, even if you're to take a look at it in terms of the general price action, right? If I put these levels in close, you can see this very clearly, lower lows, lower highs. So in a downtrend, right, when price formed this whole pullback leg of the ascending channel, right, you're seeing clear lower lows and lower highs. Following that, right, the change in market structure really comes in here when price starts breaking above the last high and closing above it. You can see when price broke and closed above it, pulled back, right? And this doji then serves as the demand region, which price came back into. So once you have this change in market structure over here, right, this is an indication that this whole downtrend that we have, right, there's an end to this downtrend. We're seeing that reversal. Now, in terms of the target really comes in over here. You can see this region where price pulled back to, this demand area, right? It creates an open target for us, this high, because in an uptrend, you can see higher lows and higher highs. Again, the highs are the targets, right? So in this example, you can see that once price did a pullback, it creates a high over here, which can be used as the target. So if price enters the lower time frame on the daily, right, when price comes into this zone, we know that we have a daily target, which is this high over here, this area, right? So let me just put these levels in, mark these levels out and remove all this marking so that it makes the chart less messy. Okay, there we go. Right, so we have this high, right? So essentially this area, this high that caused the pullback. So you can see that at this point in time when price starts coming into the daily doji, right, we are expecting that pullback given that prices have turned bullish because it broke the previous high over here. Right, so with that in mind, you can see that when price starts pushing this whole move to the upside, we're just trying to find demand areas or support regions to enter as long as this high has not been reached. Right, so this is on the lower time frame. But look at what happens after this high has been reached. So again, I talk about price forming higher lows, higher highs, targeting this high and following the target, right? So once this target has been reached, you can see a pullback. And this pullback lasted for a good 2 days. So as much as possible, this is also the reason why when price starts reaching our profit target, right? Of course, you can trail along with it. It could continue much higher, but at the same time, this pullback could erase quite a bit of the gains as well. So which is why we want to consider trailing the stop loss based on the lower time frames. Okay, but I hope that this example is clear in terms of how we can combine market structure. Look at market structure on the different time frames, try and identify when would market structure, right? So again, in the downtrend, right, you can see that this would continue to the downside. So indication of that, it's when price starts breaking and closing to the upside. You can see that price breaking and closing above this. If you don't want to use this as a confirmation, right, the next confirmation level really comes in over here, because this region, right, this was the previous high that broke structure. So again, in a downtrend, imagine if this high broke the previous structure, but not expecting this high to be violated as long as the downtrend holds. So if this high starts being broken over here, right, if this high starts being broken over here, this is when we know that there's a potential change in market structure. And this is exactly what we're seeing on the daily chart, right? So lower lows, lower highs, price starting to break and close above this, coming back into the daily demand area, right, over here on daily demand, which can be seen as a doji. Essentially, this doji just represents a range that price traded within, right, before we see a break, before we see a break to the upside with this bullish candlestick pattern. Okay, so I hope that this is clear so far, right? So if you take a look at where we are right now, you can see on dollar yen, right, on the lower time frame, we have this region, this low. So as long as price holds below this, right, we can wait for potential entries over here, targeting this low. But understand that on the higher time frame, if you take a look at it on the 4 hours, the 1 hour, it's still bullish, right? So which means that once this low target has been reached, right, if price again starts reversing or it starts forming change in market structure, right, then this will be in line with the primary trend, which is bullish. Okay, if not, right, if price breaks below this zone, right, you can see that this whole move to the downside, right, even just these two candles, if we were to go to the lower time frame, you can see clear lower lows, lower highs. So as long as this holds, right, even if price reaches this low, the target, which we have over here, you can see that when price starts doing this, right, it has to, at this point, when it comes into a target, it has to reverse. If not, the downtrend is likely to continue. So this would be based on the lower time frames, right? It can be based on your 15 minutes or 1 hour time frame. So using this example, right, if we take a look at, let's say, okay, so we have an example on euro dollar. Okay, so I have another question, right? What is the condition for a zone to be demand or supply zone? So demand supply regions, right? There are a few ways you can look at it. One is based on range, right? So a previous range that price traded within before breakout to the up or downside, right? The other is just based on higher lows, lower lows and lower highs, right? So if you take a look at it, let's say this example, you can see this whole move, you can put this levels and close, just this whole recent move itself, you can see clear lower lows and lower highs. One easy way to spot it will be based on the previous move that broke structure. So for example, this area, right, let me just remove all of this. You can see this whole move itself, this whole region to the downside, right? The previous one that broke structure, this area here, you can see price broke to the downside and then again over here, right? And this area, right, depending on how price close, right? If price closes below this low at this point, right, then this is the last high that we have. So you can see this whole region, right? This area that we have over here, this is the last high. So which means that this is essentially what we're seeing. Right, so if price break and close to the downside, this is the last region that we have, right? So the downtrend holds as long as it does not break above this high. What this also means is that if price does a pullback into this zone, right, as long as it holds between this, a supply region that you can identify, it's basically the extreme of this zone. So this whole move to the downside, right, you can take the candle that broke structure, which is essentially this move here. Okay, this is one, right? So this is based on, so there are various supply regions you can look at within this whole move itself, right? So again, one thing to note is that it depends also on your time frame, right? So if you're on the lower time frames, right, it can get a bit choppy. So which is why as much as possible, I'll try and group the movements, right? If you want to look at it based on the higher time frame, let's say on a 1 hour time frame, you can see that you can look at it just based on specific candles, lower lows and lower highs. This whole region itself, right, prices have yet to close. You can see here, right? So if the candle closed below the previous candle's low, right, that invalidates this as a supply. If not, right, then you can see that this area, we could see a deeper pullback into this zone. So, which is also the reason why, right, we always want to start from the higher time frames for our analysis, because the higher time frame zones are less choppy as compared to your lower time frames. Okay, let's take a look at euro dollar, right? So this is another example. So let's take a look at where we are. So on the higher time frame first on euro dollar, if you take a look at it on the monthly time frame, you can see this whole region, right? We have this area here. You can see price forming higher lows, higher highs. It's forming a pullback into this zone. Now with this whole move, you can see that price, again, the most recent price movement, right? Just based on this move, you can see that price broke to the upside, or rather it pushed to the upside. But what happened here is that it did not close above the high. So once that happens, you can see that it creates this low as a target. So this is on the monthly time frame. So on the monthly, you can see that when price starts breaking, sweeping above the high, right, we have this whole move to the downside with this as a potential target on the higher time frame. If you take a look at it on the weekly, you can see that again, this whole move, right, it's just bearish. Prices are forming clear lower lows and lower highs, right? Not so much on the weekly, but if I move down to the daily, you can see this as well. So very clear bearish structure here. Right? If I have to mark out the significant highs and lows, and bearing in mind that this is a potential target. So again, by using the same concept, we want to apply this, right? So on the daily time frame, again, we're trying to find if there are any potential areas for entry, right? On the daily, the last zone that we have, it's really this region here. You can see that price tested as a support and then failed this completely. So this is what we have on the daily time frame, which means that as long as this target is not reached, if price does a pullback into this zone, right, again, we're looking for lower time frame reversals, targeting this low here. Of course, right, if we do see a pullback from here, note that this is the last low that created the pullback. So this is a shorter term profit target. Okay, so the reason for that is because you can see this whole move, right? You can see when price does a pullback into this zone, this whole region over here, right? Price came back in, targeted the low, and you see this reaction. Right? Of course, this is not big. We're just seeing that slight pullback before it continues to the downside. But this could go another way, right? Could just go and pull back much deeper into the zone as well. Okay, so with this zone, right, let's go down to the 4 hours time frame. On the 4 hours, you can see again, right, price in this whole structure is just forming a bearish move. Right now, we're just seeing consolidation around this area. So if you look at this whole movement, right, we're seeing consolidation around this zone. No clear bearish move at this point. If you notice this whole price movement here, what we have here, you have again price, right, forming lower lows and lower highs. You can see that this area, this low that caught the pullback. So price pulled back into a supply region over here. And this region that caught the pullback, this area here, right? You can see that this low becomes a target. So if I move to the lower time frame, you can see this clearly on the 1 hour. Price pulled back into the high on the 1 hour. But higher time frame is still bearish, right? Given that we are on the daily, we went through the different time frames, right? It's still bearish. So when price starts pushing into this zone, you can see that it creates this as a target, right? So if I were to go back to the 4 hours, you can see that this whole low that caused the pullback, this whole region, right? It creates a target over here, and price then came in, right? And we are seeing that coming in to reach this target. And once this target has been reached, what happens after is that you can see this whole region that we have here, our price starts pulling back into the zone. So if you take a look at where we are right now on the 4 hours time frame, right, this whole area itself, prices are consolidating around this zone. So it creates two region or two range that we can work with. On the higher time frame, it's still bearish, right? So as long as price turns bearish, I'm looking for any signs of reversal, targeting this region. You can see that this is the current area that we have. We have the low, which price came in over here, caused a pullback, and then price came in again to hit this region as a target over here, and now it creates a new level for our target, which is essentially this low. So this is on the higher time frame, right? Given the higher time frame is still bearish, right? This is a potential area that we can target. Right, so you can see this whole move to the downside. If we were to look at it, let's say down on the 15 minutes time frame, you can see this whole move that we have to the downside. Again, prices are forming lower lows and lower highs. You can see this whole region, this whole area. Right, so prices forming lower lows and lower highs to the downside here. So one question we want to ask ourselves is, when is this candle, or rather when it's this, what's a potential entry for the supply zone? Right, so at this point, you can see that this area, this whole zone, so we have a target at this low, right, and this whole region was the previous support level that failed. You can see this area here, right, very clearly. Price came in, we see that support, and then price failed it, tested this region, right? So as long as price holds above this zone, right, this is still valid as a resistance area. To be more specific, right, this whole region itself, I would consider this whole area here. But in terms of the level covering the high, right, this whole move itself, I would consider this high here. Okay, so this is one, right? If you want to be more conservative, right? If you want to be more aggressive, just based on the candles itself, you can see that this area that caused the pullback, right? This whole move that we have to the downside, price broke and close to the downside here, right? And then following that, you can see a break and close to the downside again, this area. So which means that as long as price holds below this zone, this high, right? This is the last area for consideration. So when price starts pushing into this zone, right? As long as we're seeing lower time frame reversal, we can target this low as the shorter time frame profit target, and also this low from the H1, right? So this is from the H1, right? So understand that general direction force on the higher time frame is still bearish, but at the same time, right, this whole consolidation, right? If price starts coming into this zone and we're seeing that reversal, so reversal comes in the form of higher lows and higher highs on your lower time frame, then you can see that this region that caused the pullback would then be a target, right, for any short-term long positions. But on the higher time frame, if you're basing it on the 4 hours and the daily, right, it's still bearish. Over here, you can see just the most recent move on the 4 hours, very clear bearish structure. So price forming lower lows, lower highs to the downside, right? So this region, so this is the last area that we have as resistance or supply, right? So if this area holds, you can see on the lower time frame, right? On the 15 minutes, if this holds, if this target has been reached and price starts holding on the lower time frame, right? We can target this high. That's one. And then, of course, if you move to the 4 hours time frame, right, there's another high that's here that caused this whole pullback. Okay, so that's after this region has been reached. So that's my view on euro dollar. Right, so I hope that answers your question. Okay, so we have another question, right? So if in an uptrend, for example, the price couldn't break and close above the last higher high, we're targeting the previous low as the supply-demand zone. Yes, so I believe you're using, okay, so in the same example that we covered on dollar yen, right, you can see that this whole region that we have over here in an uptrend, you can see that when this target has been reached, this area has been reached here, price did not close above this region, it creates this as a valid shorter term target over here, right? And if you take a look at it on the higher time frames, right, let's say, for example, if I take a look at it on the daily, right, this makes sense. Imagine if we're on a higher time frame, you can see that price forming higher lows and higher highs. This target has been reached. You can see this whole region has been reached here and price did close above this high, right? So we're still in a bullish market structure on the daily time frame, but this whole area, this shorter time frames pullback that we have, right, it will form the bigger leg of the daily time frames pullback. So for example, right, you can see price broke to the upside, this area, it broke to the upside, right? And then it pushed back into this area again as a support region. But at this point, right, when price starts pushing and it reach this target, right? At this point, you can see this whole pullback leg that we have. If I have to move down to the lower time frame, you can see this whole pullback leg that we have, right? It's because the lower time frames target has been reached. So you can see this move, this area here, right? So price came in, we see this target has been reached. And once the target has been reached over here, right, price did not break and close to the upside, right? Then this is what forms this whole pullback leg. Okay, so I hope that this is clear, right, in terms of, rather this is clear in terms of how I can answer your question, Chris. Okay, you're most welcome, Kathy, right? Thanks as always, right, for your support. Okay, so if there are no other questions, right, that's what we have for today. Okay, I'm seeing that we don't have any other questions as well, right? So if not, that's what we have for today. Okay, so yeah, so for tomorrow, right, we will be having our live analysis session for tomorrow. So just go to education and tools, educational webinars. Oh, right. Okay, we have one on Go, right? So let's take a look at it. So sorry for that, right? Let's take a look at this on Go. So if you take a look at it on the higher time frame first, on the monthly, right? So on the monthly, we highlighted a few levels. Let me just remove all this. So you can see on Go, right? We have this high. So we covered yesterday on Go as well. We have a potential pullback retest. So this is currently where we are right now. If you take a look at it on the weekly time frame, we have a descending channel that prices are potentially holding to the downside, right? And this whole move itself, we're seeing this whole lower lows and lower highs being formed. Now, when we go down to the lower time frame on the daily time frame, previously on Go, this was where we are, right? You can see on the daily time frame, price came in. We're seeing a test of this zone. So this whole move to the upside, you can see that prices are, again, this whole region, right? It's forming higher lows and higher highs. It's coming into a potential demand area that we have over here, which really sits here. So you can see that price tested. If I put this levels in close, you can see this clearly as well, right? Two resistance area that failed, price broke to the upside. So it's currently sitting on this zone. So it creates this as a potential target for us on the daily time frame. Again, whether we'll see a reversal from here depends on the lower time frame. So this whole move that we have, right, focus on this region. If we move down to the 4 hours, you can see that the 4 hours itself, just the most recent move, is still forming very clear lower lows and lower highs. So bearish structure to the downside, right? So any pullback itself is light. I think we could be seeing some consolidation around this zone, right? But this area itself, right, it's probably, I'll just wait for a while for price to play out, right? At this moment, you can see this whole move on the 4 hours is still bearish. If you take a look at it on the 1 hour time frame, right, this is currently where we are. You can see pretty much the same things, right? So very clear bearish structure, right? So price coming into this move, you can see that this whole region. So yesterday we marked out the high, which we need price to break and close above, right, to be considered this area here. So you can see yesterday where we were on gold, right? Price came in, tested the demand. You can see that this area, so two schools of thought, we could see a reversal from here, or price could just continue much lower. But for price to show a change in market structure, you can see that pushing into this zone, again, pushing to the demand zone, you have bearish structure, very clear lower lows, lower highs to the downside, right? And this was the last high that broke structure, this area here. So yesterday when we marked out this zone, we're waiting for a break and close to the upside, which did not happen. You can see this area did not happen. So there's no indication of any reversal, at least on the lower time frame as of now, right? So if you take a look at where we are here, you can see that it's currently prices did not break structure here. This is really a range that is trading within. And this range, the target has been reached. You can see this zone, right? So price traded within this range. And within this area, you can see that it broke and then it created this as a value, which price tested. And then once again here, right? So I think we need to wait for price to break above the range for more consideration of, at least for a clear bullish trend to be formed for an entry, right? Right now, it's just going to consolidate. So this is currently where we are right now for gold. Okay, so I hope that answers your question, Jamilu. Okay, where can you rewatch the video? So for the video, right, I would probably have to check with the team again, but I believe you can also request, right? So you can request for it. Just email to Vantage, support@vantagemarkets.com. So this is the email. Okay, so you can just email in to support@vantagemarkets.com. You're very welcome, Jamilu. I'm glad that that helps. So one other thing to note, right? So we have an exciting giveaway. So this it's for our Valued Vantage clients, right? You have now incredible opportunity to win a fully paid trip. It's worth $4,000 to the UK to attend the prestigious McLaren Gala dinner on 4th of October. So the winner will be treated to a delightful 3-course meal and have the privilege of meeting the drivers from the NEOM McLaren Extreme E team in the private meet and greet session. So making the occasion even more special, right? Vantage Global ESG Ambassador Supercar Blondie will grace the event with her presence. As a cherry on top, the winner will get an exclusive tour of the remarkable McLaren Technology Center. So in terms of how you participate, right, all you need to do is follow the Vantage Markets Instagram account and submit your details via this form on the QR code, right, by 17th September. And we will drop the relevant links in the chat shortly so you can get right to it. So one lucky winner will be contacted via email on 20th of September. So best of luck to all of you. Right, so this is for the giveaway, right? So if you want to participate, you can just scan via the app. Okay, so yeah, that's what we have for today's session. Oh, you can't see it. Oh, let me just, so sorry for that, right? Let me just share this in a moment. Okay, so I hope this helps. You should be able to see it now. Okay, so with that, right, I believe that's what we have. Let me just check the questions. And so that's what we have for today. Okay, so yeah. Thanks everyone, right? So I hope that this session has been useful. So for tomorrow, right, we will be covering on our live analysis session. So you can just go to vantagemarkets.com/webinars and sign up for the session. Okay, so if you want to get a replay of this, let me just check with the team, right? And I'll get back with this. I'll get back on this, right? And for the sessions, right, if you want to sign up for the sessions, you can just go to vantagemarkets.com. So let me just bring that up in a moment. So if you want to sign up for the next few sessions, you can just go to this website. Okay, so under vantagemarkets.com/webinars, you should be able to register for the session here. Okay, I'll just send the link in the chat so that it's useful. Right, let me just send this. Okay, it seems that I can't really send this, right? Just, yeah, this is the link, right? Just go to vantagemarkets.com/webinars and click on the schedule. You should be able to, it should link you to the application page. So this is also where you can check the schedule. We have webinars running on a daily basis, right? So you can check the schedule, speakers, and the topics that are being covered. Okay, so with that, right, thanks everyone. Have a great trading week ahead, and we will catch you guys again tomorrow.